Hello, everybody. As you can tell, we are back on the markets. So today is currently Thursday, September 18th. It is 12:13 at the beginning of this recording. I just wanted to talk a little bit about my opinion on interest rates, how I think that affects or does not affect the market. Trading that, do I think that is a tradable event? So on and so forth. So as you can see here right now on my screen, again, I've been following American Eagle. I showed you when I lost $300 on a swing trade. After the initial appreciation that has stayed with me. My current outlook on the market is I think I'll go ahead and call a top here. Obviously, nobody knows, but what I'm playing here is American Eagle specifically. Again, if you're referencing the time, again, this video will be uploaded the same day, but the markets are currently sitting pretty much at all-time highs, certainly for small caps, but for the major market averages or indices, those are also, if you look from just at the S&P 500, pretty much have an extended trend since April of this year. And so what I am playing is most stocks trade with the market. The population is increasing, so overall, again, was that 5 years, 10 years, 20 years, 100 years, I do think the market will generally increase. I don't think that will change until the population kind of stabilizes, which I do not see in our lifetimes. So again, staying with the saying that the market tends to trade upwards, I see that to stay intact for the foreseeable future because of population increase. So I think it's about time for the S&P to come down. Why do I think that? I just think the Fed rate, after the Fed rate, the build up to the 0.25%. Again, when you guys say points of a basis, that gives me brain cancer. but with the interest rates, the decision, I didn't really see that as a tradable event, and it didn't really create that much volatility on anything. Move our chart back over here to American Eagle. The point being is the market's trading really strong. American Eagle is not trading really strong on the given day. The backdrop of American Eagle is it has that 30%, 40% increase from the Sydney Sweeney announcement. I see American Eagle as a cyclical kind of trending down, not going out of business tomorrow, not going to have some breakthrough innovation tomorrow. So I don't see it as at risk for extreme volatility as opposed to you pick a random ticker like we showed you that ASST. I've never heard of it. It's not in the news. It's just, I don't know if it's three guys in an office in Brooklyn with just some public company. But the extreme volatility, we're trying to stay away from those and just trade more of your standard market participants, your big name stocks that you see on CNBC all of the time. Benefits to that, again, you get tighter spreads. If you have more security in the sense that they're actual real companies doing stuff and you've heard of them, as opposed to something that just has volatility, but you need the volatility to make meaningful trades. But again, for my positioning, again, my account, I have about $17,000 in cash, not considering this position. We're sitting up currently about $114. But just keeping it above the pattern day trade amount in my account. But overall, like I said, I think a pullback will happen sometime. I'm going to go ahead and call it top now. But no, if it does hit, it doesn't matter. It's not, if I'm right or wrong, it's not indicative of me knowing something anybody else doesn't. It's just about putting your chips on the table and being in the right position at the right time and then managing that. So hopefully this will develop again. Hopefully this closes below 20. Again, we have another big psychological resistance at these whole numbers. Why that happens, don't know, but does it? Yes. So with a close below 20 on American Eagle, I see tomorrow being Friday where a lot of day traders or swing traders, and I don't see any meaningful difference, as I've said before. You have entries and exits. So if you're a day trader or if you're a swing trader or if you're an investor, those differentiations mean nothing. Obviously, if you're going to hold it for 3 years, you still want to have the best day entry that you can, even if you don't close it that same day. So really looking for a close under 20. We'll hold the position overnight if it does so. If it doesn't, again, my stop pretty tight here after this initial move down. If it closes above its open, something's going wrong. So I'll stop out in our average price at $20.03. So that gives us a risk of about $40 to $50 looking to make. Again, sitting up about $100. If it closes below 20 and closes below 1950, we'll probably take a much bigger position tomorrow after the open, not hold that risk overnight, and hopefully get down into break 19, cover under 19, and just see how the price action develops. Because like I said, it's 12.15 or 12.18 right now. And so if this reverses today, I might get stopped out today. If it closes down, I might add bigger tomorrow, might add more today. I'm just really watching just how the trade progresses. And because a lot of people don't realize, like, if you're just getting new to trading stocks, you're really reacting to other people's emotion and the momentum generated by that emotion. Because most people have jobs, right? Like, most people aren't sitting here watching stock charts all day, every day, even fund managers. And so as a small-time trader with nothing to do, I can literally just sit here and watch this stuff. But the day-to-day or even like the minute-by-minute changes, they aren't reflecting of meaningful fundamental changes, obviously, of the actual business. So that's really what you have to moderate, is getting used to your emotions when you're trading stocks. But again, I'm trading in a way where I don't really have a goal. Like, I'm not trying to make money to get rich, or I'm not trying to lose money. I'm just trying to execute good trades to make content like this. So that's my trade for American Eagle. And then if we do get that pullback, because the population increases and the general tendency is to increase in the stock market pricing, I would be a long investor. If we did get a substantial pullback just on major market indices, I'd most likely invest in actual individual companies whenever I think the bottom would be in, as opposed to buying options. I always like to own something physical. Again, a share of a company is still on paper, I guess, but if it's brick and mortar, if it has something, if they're selling a product, if I can go into a retail store, at least you're buying something that they could go out of business. Obviously, companies do and can and do, but it's more likely to have some sort of appreciation where you can cut your losses, as opposed to three dudes in Brooklyn where they just get some meme stock and appreciates 100%, and there's no real business underlying that. But if you do have a real business underlying it, there's no meaningful changes on each of these little ticks, 3-minute charts, day charts. You just want to have a setup that is reasonable for your time frame, for your money management, and for the potential volatility of what seems reasonable. And again, all of this is super loose, and this is why I like economics, because I can very literally solve all physics in like 2 seconds, and then I go and trade stocks, and I'm pretty much like everybody else. I certainly have a more analytical capacity, but you can't prove something that isn't true, right? So the market's the market, in the same way the universe is the universe, right? So there's so many cross currents in terms of, like, for the interest rates, right? There's people that are lending money and people that are receiving that money lent. And so if I'm the Federal Reserve, if I'm assuming the goal of the Federal Reserve is to stabilize the economy and not to make money itself, it's more trying to moderate volatility. Obviously, you want people to make money. The fact that profit exists at all shows you that the game theory is wrong in general. We can all win together. Rising tides raise all boats, whatever cliche you want to use today. But the simple fact that profit exists proves that this is not a net zero game. And it's because there's a lot more inefficiency that can move towards efficiency, as opposed from efficiency going to inefficiency, right? Where society is going to progress. Not trying to get into science here, but point being is that with this, when I say underdeveloped emotional base of like 8%, you're all like, everyone who starts a company thinks they're going to be the biggest and the best, and they have these big high flying ideas, and it's not bad. It just doesn't pan out. Some of them do. Some of them come, but for every 10 people that think they're going to make it really huge, or 100 people, one does. And so the momentum on the increase, you get a lot more. Like, I would love to trade calls or long positions on the momentum, and then short the fading of that momentum, as opposed to trying to just pick the top on a short position. So you think you're going to change the world, you don't, your stock comes down. And then also, right, every earnings call, the company's always we're going to change our business model, XYZ, our advertising, this, that, whatever. And, the optimism is always overdrawn, and the decrease, the shit hits the fan, the floor's falling out from underneath me, is always exaggerated. And so as the investor maturity of everybody increases, there will be more correlations. There will be stronger correlations. But right now, it's still like, you can go back and look at the tulip mania of whatever year that was, and the market dynamics are still the exact same. And so the development of economy is way longer than any one lifetime, any one company, so on and so forth. Just trying to put your chips on the table and be in the right place at the right time. I don't see listening to people on CNBC, my own intuition, I literally, like I said, I wait for the volatility events. To me, the Fed announcement did not cause much of any volatility. Certainly not operational, like make a decision on something. And do I want to say anything else? Because again, right, if I'm bidding back to someone's lending money and someone's receiving money, the consumer, which really drives the economy more so than, right, innovation. You can say innovation or consumer, but really the consumer drives the economy. And so we've talked about educated consumers. As people become more educated, they're going to know what they want. So the impact of advertising will go down. But the point being, for interest rates, right, if I'm a consumer, when would I want to take money? Right? If I can borrow money at 3% and make 5% on it, basically anytime I can make a meaningful amount of money, whether that changes a lifestyle or if you're running a business that makes you operate a different way, anytime you can make more on the money you borrow, you're going to borrow that money. And so does borrowing money mean that the economy is strong or weak? It doesn't give me a clear direction. Now from the Fed, right, because they're not trying to make money, but if you're lending money as a private institution or person or investor or whatever, you want to make interest on that. So it's like interest rates being high means the person that's lending the money thinks you can pay it back and pay you back more. So it's like, is interest rates high? Because they'll say, interest rates coming down means that you're going to get more return from an individual investor to go to stock equities. But it's just like, okay, so you go from 4% fixed income to 3.75% fixed income. You go buy American Eagle like we're short right now, and then it decreases 40%, or it increases 40%, or it goes in whatever direction you pick it's going to go, it goes the opposite way. So you wanted to capture on that quarter point percent that you lost on your fixed income, and then you plowed it into a stock equity that depreciated 40%, well, you just screwed yourself twice. And so it's like, what causes what is in no way clear to me. I think it's evidently not clear, and I do think there are strong correlations that can be drawn. Clearly, if there's not volatility, to me, is it baked in? Is it expected? There's just so many cross currents in these financial markets that, to me, the rates doesn't really mean anything, and there's not even enough developed conversation, right? Because I don't hear anything. If you can articulate something logically, I can understand it, where you're coming from, that intuition entirely immediately. And when I watch all of these big fund managers talk, they don't even discuss the dynamics of what's occurring. And so you can't even make definitive statements. And so, again, I'm not over here saying I can magically tell you what's going to happen in the market, and provably I can't because of the market dynamics. But when I don't even hear like developed conversations on who's lending the money, who's getting the money, why is that indicative of this? If I can, again, lower interest rates to me means the Federal Reserve doesn't think the consumer can pay back the loan. Because again, if the loan is 100% interest rate, but I'm going to make 200% or even 105% on that money that I borrow, there's still that 5% difference that I'm going to make profit. And so it's just not clear. Like I said, you can make logical statements, but they're not specific enough with corresponding evidence to make something meaningful, in my opinion. But that's what I have for interest rates. Specifically, it's just one of those events. It's really big on CNBC, and then nothing kind of happens. But point being, for my trade on American Eagle, you have a very strong market. You have an individual stock that has appreciated substantially, trading I won't say weekly, but weekly under a whole number that's significant for the stock itself. Because we see this previous day we traded above and below this right here. This little loop-de-loop, this is when the announcement happened for the Fed. So you see it doesn't really, it went down, then it went up, but the variation intraday was not that much. And so I took about, I was short yesterday too, made maybe $30, $40, re-entered, did not want to hold overnight. We have this nice move to the downside over here, if my computer wants to cooperate today. But like I said, close below 20, holding, close below 1950, feeling real good, probably will add. But I'll give you an update at the close of today, or if I make another change, and then we'll follow this trade as it goes. So, see you then. Alrighty, everybody, welcome back. So it is 4:07 p.m. September 18th. The trading session has just concluded. So as you can see, we are short 200 shares American Eagle Outfitters at an average price of $20.03. We're sitting at a profit level currently at plus $77. So we take a small position. The market's closed at pretty much all-time highs on most of the major indices, at least the ones that I checked. You can see when we cut off the last clip, we were finishing up, I think it was 12:13 was what it said, so that's when we started recording. And so right after we finish recording, we get this initial little pop-up here. We stay under the volume-weighted average price, that is the VWAP right here, and our adaptive moving average right here. When we come settle back down, it gets this final little pop, but it closes below the 20, which we wanted. Ideally, we would like it to have been below the 1950 level, which would have been fantastic, but this is still a great setup. So with the markets at all-time highs closing and American Eagle Outfitters not any sort of innovation in any way, hopefully, it could skyrocket, it could go crazy like anything else, and you always have that risk with shorts, because you could have to do a limit sell if you want to do a quote-unquote stop loss after market. But what I was going to say, so tomorrow what I'm looking at, hopefully we get a breakdown of this little movement right here. That's our appreciation from the advertisement with Sydney Sweeney. Our first trade, we got stopped out after this 3-day consolidation up into here. The trade has not changed whatsoever, still trying to capitalize on a lot of this. And if we do get lucky enough to hit when the market turns, again, I called the top at the 12:13. Total guess. There's nothing solid there if it's right or wrong. It's just a total guess. But if we do catch that, if we have a stock that already had a big amount of appreciation and the market turns, and it traded weekly today with the market up, we could catch a nice little or a big retrace, catch 40, 50, 60% return. So that is where we're at today. Looking forward to add to our short position, probably upwards to like 1,000, 1,200, 1,400-ish shares on any sort of pop in the morning tomorrow. And then hopefully, again, catch the Friday, maybe a sell-off on the market altogether. But certainly I see weakness in American Eagle in respects to the other stock equities. So that is the plan for today. Obviously, I'll upload this today to keep it time sensitive. And I'll probably make an update video. If not, it might just be a short. But you can just follow the price action of American Eagle. And if it goes above, if it breaches or gets close to this 2043, if it goes above 2050, will probably be where my stop loss will be. Again, crossing my fingers, hopefully American Eagle doesn't cure cancer tonight. But again, within the past year, it hasn't traded above 2263. Nothing really huge coming. So could go crazy, but very, very unlikely. And that is my approach for tomorrow. So we'll see how it goes, and I'll check back in later.